Hey everyone, welcome back to Corporate Decoder. Today, QRED-U just filed a note about their IPO over-allotment option, and I am seeing a very clear sign of investor demand. Quick note, this is not financial advice, just my take on public filings for educational purposes. This company is raising more money than planned, which is usually a good sign, but let's dive into what that means. QuasarEdge Acquisition Corporation, also known by its ticker symbols on the New York Stock Exchange, QRED-U for their units, QRED for ordinary shares, and QREDU for their rights, is essentially a shell company, often called a SPAC or Special Purpose Acquisition Company. These companies are formed to raise capital through an initial public offering or IPO to acquire an existing company or merge with one, taking it public in the process. This particular filing, a Form 8-K, is a current report that publicly traded companies must file with the US Securities and Exchange Commission or SEC to announce major corporate events that shareholders should know about. This report is dated the 17th of April 2026, and it is all about what happened after their initial public offering or IPO. So, what is the big news here? The company announced that the investment banks called Underwriters, who helped them sell their shares in the IPO, decided to buy even more shares than initially planned. This is called exercising the over-allotment option, or sometimes referred to as a green shoe option. They bought an extra 1,500,000 units at $10 each. This means QuasarEdge Acquisition Corporation is bringing in an additional $15 million. What this tells us is that the IPO was very popular. Originally, they planned to sell a certain number of units, and now, because demand was so high, the underwriters bought these extra units. This brings the total number of units sold in the IPO to 115,000, and the total money raised from the IPO is now a whopping $115 million. This is a really positive sign because it shows that investors were eager to get their hands on these units right from the start. Now let's break down what these units actually are. Each unit sold in this IPO is not just a simple share, it is actually a bundle. It contains one ordinary share of the company, which has a very, very small par value of just $0.0001. Think of par value as a nominal accounting value. More importantly, each unit also comes with one right. This right gives the holder the chance to receive a portion of another ordinary share in the future. Specifically, it allows the holder to receive 1/4 or a quarter of an ordinary share. This structure is common for SPACs as it can create additional value for investors over time if the company finds a suitable target to merge with. The fact that the underwriters bought all these extra units signifies strong investor confidence. When underwriters exercise this option, it is usually because the stock is trading above its IPO price and they need more shares to meet the demand. For QuasarEdge Acquisition Corporation, this means they start their journey with more capital than they initially projected, which is a big plus for whatever acquisition or merger they are planning next. However, it is crucial to remember that this is just the beginning for QuasarEdge Acquisition Corporation. They are a SPAC, and their main goal is to find and merge with another company. The success of the SVC hinges entirely on the quality of that future merger target and the subsequent performance of the combined entity. This IPO success is a great launch pad, but the real work of building value has yet to come. The additional capital provides them with more flexibility and potentially a stronger negotiating position when they go to make that deal. The trading symbols tell us about the different components they are offering to investors. QRED-U are the units, which as we just saw, are made up of shares and rights. QRED are the actual ordinary shares themselves, and QREDU are the rights. All of these are trading on the New York Stock Exchange, which is a major exchange giving them significant visibility and access to a broad range of investors. The company also checks a box indicating they are an emerging growth company. This status, defined by US securities law, allows younger companies to benefit from certain regulatory flexibilities, like reduced reporting requirements and extended deadlines for adopting new accounting standards. This typically means they might not have to provide as much detailed financial history or face the same immediate scrutiny as more established companies. Looking at the signature, we see that Qi Gong, the Chief Executive Officer of QuasarEdge Acquisition Corporation, has signed off on this report, confirming the information for the company. So, to sum it up, QuasarEdge Acquisition Corporation has successfully tapped into strong investor appetite with its IPO, raising an extra $15 million by selling more units than initially planned. This funding will be critical as they move towards their primary objective, finding a company to merge with and take public. The success of this IPO is a positive indicator of their ability to attract capital and might mean they can secure a better deal for their future merger. But the true test will be the chosen target and its performance post-merger. That is my take. Stay decoded. If you found this analysis helpful, please like and subscribe. You can find the tools I use linked in the description.